Five-Star Business Finance just released its earnings for quarter one of fiscal year 2026. So let's check out these earnings. So first of all, the loan portfolio has experienced a growth of 20% year on year and now stands at around 148,578 million rupees in quarter one of fiscal year 2026. It is around 12,457 crore rupees. Now, interest income has increased year on year by 19% to 7,647 million rupees. Now, this interest income has been divided into several parts. The um, biggest part being interest on loan portfolio. This has grown by 18%. Then penal interest has grown by 8%. Interest on intercorporate deposits, a very small portion of total income, has declined by 98%. Then interest on its investments have increased by a massive 112% year on year, and processing fees and other fees relating to its loans and all have increased by 21% to 207 million rupees. Then, second, we have net gain on fair value changes, that is, changes in the value of its investments. This has declined by 33% year on year to 124 million rupees. Then, we have other income sources, very important for financial institutions. Fees and other incomes have grown by a very nice 44% year on year. Here we see the major part being fee income having grown by 48%, then recovery of bad debts and other non-operating income. So overall, total income has increased by 18% year on year, but interest expenses have also increased by 18% year on year. So the net interest income, meaning the interest income minus interest expenses, the net interest income has grown also by 18% year on year. Operating expenses rose by 28%, and loan losses and provisions. Here we have loan losses and provisions grew by 158%, a massive number. Therefore, because of these, what can we say? Big rise in these expenses, operating expenses, and loan losses and provisions. Because of a massive rise in them, the profit before tax increased by a very small 6%, and profit after tax again increased by a very, very small 6%. Here we can see the earnings per share diluted. We have 9.02. I believe this is rupees. Yes, 9.02 rupees. Book value per share is 219.93 rupees for this quarter when compared to the quarter one of last year, where it was 182.56 rupees. So a nice growth in book value. Now moving on to other metrics, here we have, yes, net interest income as a percentage, we have 13.97%, which is a bit lower compared to 14.57%. Interest income as a percentage of average portfolio decreased from 24.22% to 23.51%. Here we have NIM, a very important metric for financial institutions, or net interest margin, decreased from 16.7 to 16.43. The profit before tax PBT percentage decreased from 11% to 9.66%. Then profit after tax as a percentage of total assets, profit after tax as a percentage of total assets decreased from 8.23% to 7.24%, and return on equity decreased from 18.95% to 16.57%. Here we have total cost to income ratio, which has increased from 34.34% to 41.34%. So return on equity, return on total assets, both have decreased. Then we have some more metrics. Yes. Number of branches. This quarter, branches have increased by 220 when compared to last quarter. Total branches stand at 767. Loan disbursements. So loans given out this quarter when compared to quarter one of last year 12,901 million or 1,200 crore rupees, minus 2%. So disbursements, loans given out this quarter are lower than loans given out in the quarter one of fiscal 2025. You have gross non-performing assets, 2.46%, increased by 1.05% year on year. Now, plus 30 DPD. What is this? DPD means days past due. So loans which are days past due or overdue by 30 plus days. So 11.3% of its total loans are past, like, are overdue by 30 days. This is a growth of plus 3.2 percentage year on year. Net interest margin, we already saw it has slipped to 16.43%, still very exceptionally high. I think it's the highest among any financial institution, maybe in India. Return on assets have slipped a bit, 7.24%. We already saw this. Return on equity, 16.57%. Here we have profit after tax increased by a pretty small 6%. Moving on, we have, yes, yes, AUM, assets under management by geography. Here you can see 29% comes from Tamil Nadu, 37% comes from Andhra Pradesh, 19% comes from TS. So we can see that it's very South India concentrated. Yeah, very South India concentrated. AUM by branch tier. So very small. It seems 1%. 1% of its total branches are in tier 1 and tier 2. Okay, we have 45% are in tier 6. AUM by branch tier. Okay, so AUM by branch tier, 45% of its AUM is in tier 6 branches, 31% in tier 5 branches, and then we have tier 4, tier 3 making smaller percentages. And by vintage of loans, I believe that's a time period. So 37% of loans are less than 1 year, 50% are 1 to 3 years, and 3 to 5 years is 9% of loans. Here we have ticket size, average ticket size. 53% of loans are in the 3 to 5 lakhs range. 31% of loans are in the less than or equal to 3 lakhs range, and 15% of loans are in the 5 to 10 lakh range, giving it an average ticket size of loan being 3.86 lakhs. Moving on, we have asset quality indicators. Now, collection efficiency, 95.1%. Okay, yes. Now, gross stage 3 assets, we saw this. It's 2.46%, has increased rapidly from 1.41% in June 2024 to 2.46% in June 2025. Here we have the net NPAs, which is gross non-performing assets minus all the funds set aside to cover these losses. So whatever is left behind for all these funds which have been set aside for losses, after deducting that, we have net non-performing assets currently standing at 1.25% of the total loans, a massive increase from June 24's results of 0.68%. So NPAs, gross and net, both have increased, though interest on portfolio, interest income, and fee income all have grown very well. Operating expenses and provisions, the costs concerning provisions to cover all these loans and other such losses have increased way faster. And this is why this quarter results have been a bit muted. So overall, profit after tax growth of 6%, gross NPAs have risen, net NPAs have risen, the cost to income ratio have also risen for five-star business finance, and AUM has grown by 20%. So that's it. Hope you have a good day.